Hi there, guys, and welcome to this week's episode of Midweek with Indiacharts. I'm your host, Muskan Kapoor, and I'm joined here with Jay Bora. We're going to discuss what the market did in the previous few days and how it's going to be placed next. So let's just get started. As we always discuss about data points for starters, we'll do the same. What are some important data points which were released in the weeks that gone by? And what do you think the Fed will do with the Fed fund rates in the upcoming meet?
Right. So when we had recorded the video last week, I mean, that is on Wednesday. So at that point of time, CPI data was supposed to come,
Correct.
and that had come below expectation. Okay, so be it the core CPI and CPI, and later on PPI data had come, even that was below expectation. I mean, wherein so it had come weaker basically. So that was good for the markets and for us, because that indicates that the inflation is cooling off. And today, I mean, I think yesterday we had got the retail sales, even that has come weaker than expected. So all this is pointing out towards a bit of a slowing down of the economy, and basically the cooling off that was much required to control the inflation. Now the only thing is that the employment data, I mean, that is still a bit of, I mean, that is still a bit strong, and we need to see how the housing activity shapes up in the coming, weeks and months. So, that will kind of determine, what path are we going to follow. But, if we go by the Fed speech, so it had mentioned that there is two rate hike that is possible, that is of 25 bips. So, most likely in the forthcoming, for this Fed meet, we are likely to see 25 basis point hike. Okay, but I am not too sure if we are going to see further rate hike. That is because now most of the data points are going in the right direction, that is on the way down, and that is what Fed might have wanted as well. So so I think that we are getting there in terms of the rate hiking cycle. And I think most of the Fed during, I mean, the other Fed members also, they said that we are reaching to that point where I think it would be appropriate to hold. See, now the only thing that market will watch out for is that how soon the Fed starts cutting the rate. Okay, because if we go by Fed Powell, then he has been indicating that we would like to see a significant drop in all the parameters that they are looking at, and only then they will think of a rate hike. So over here, the catch is that the rate hiking cycle might be complete, but we are not yet there for a rate cut. Okay, so rates are likely to stay higher for a longer period of time until the data doesn't cool off. But market is seeing it positively, and it is thinking that the Fed is possibly now under, I mean, basically the inflation is now under control, and the Fed now increasingly is being successful in what they were, I mean, what they wanted to achieve. So in that sense, there can be a soft landing, and there cannot be a very bad sort of recession kind of phase. So that is where the market is cheering up, and it is, and that is what has led to the rally in the S&P 500 as well, which we have seen in the past few days.
Got it. Talking about S&P, I would love for you to elaborate on that, because I want to know that how people are positioned in the S&P 500 in the futures market, and if we can
Right.
see any further rally from what you're talking about.
Right. So I'll show when we look at the CFTC, positioning in the S&P 500. So you can see that it is still significantly higher. Okay, because in the past 2 to 3 weeks, S&P 500 has seen a significant up move, but still the shorts haven't been covered yet. And if we see it in the context of previous short positioning, so over here as well, basically what I'm trying to say is that the positioning is still very high, and there is a scope of a short covering rally. Okay, and when we look at the chart of S&P 500, so we'll see that, wait a second. So when we look at the chart of S&P 500, you can see over here that hourly averages are respected and it is inching higher. And broadly, if you see, over here, it took support at the 20-day average, it took support at the 20-day average, and it is continuing to rise higher. So basically, I think the 20 and the 40-day average, these are very important levels to watch out for from the short to medium term perspective. And I think as long as the 40-hour exponential average doesn't break, I think S&P 500 could be headed higher. And the other reason, which I had highlighted earlier as well, is that all the key averages are broken on the weekly and the monthly chart. So over here as well, you can see that in the weekly chart, it is trading above all the key averages. And on the monthly chart as well, it has closed above the 20-month average month back, and it is continuing to rally higher. So, most likely it should head higher towards the upper band of the, monthly Bollinger Band, which is right now around 47.38. Okay, so that is where it should be headed higher. And also, if we look at the short positioning, there hasn't been much change in the past 3 weeks. Okay, so you can see over here that there has been barely any change in the short positioning on S&P 500. But at the same time, S&P 500 is inching higher. Okay, so there are a lot of arguments that are there in the market right now. Even when this retail sales came yesterday, so they are telling that it's a big drop when you adjust it with the inflation, and that is actually pointing out towards a very weakening of the economy. So bears have their own argument, and maybe that's why they haven't still covered their shorts. But if we purely look at the price action, it is trending higher. And like I had said in the earlier week as well, that if we close the room and we don't hear the news, and if I have to only see the chart, then the chart is actually telling me that the trend is bullish, because you can see higher top higher bottom formation on all the time frames, and all the key averages and resistance levels are also breached. So for example, 61.8% retracement of the entire decline, okay, that has been breached long back, and it is trending higher from there. In fact, even the 78.6% retracement, which was around 45.40, that is also on the verge of breaking on a closing basis for the weekly. Okay, so if we get a weekly close above 45.39, then we will also breach the 78.6% retracement mark, which means logically the next level on the upside will be the all-time high, and that I think is around 4818. Okay, so all these things are pointing out towards an up move in the near term, that is especially for next 2 to 3 weeks at least.
Got it. Correct. So I want to talk about something we have been watching for a very long time. We are watching the dollar index and its correlation with gold and silver for quite some time now. So the dollar index has broken the 100 mark. So what's next for that, and how is it going to impact the gold, silver, and the emerging market, also the Indian markets overall?
Right. So 100.70, that was the mark that we were watching out for. And finally, there has been a decisive weekly close below that. So when we look at the near term, so because there has been such a steep fall, a pullback is very normal. But I think, technicals will probably play out very well, wherein, this 100.7 to 100.8 mark, which was earlier acting as a very strong support, this time will act as a very strong resistance. And, breaking past 100.80 might be difficult this time around. So, what might happen is that there will be a minor pullback till 100.80, and after that, it is expected to head lower. And in the broader scheme of things, it is very important to understand what is happening. Okay, so basically, this entire decline was one leg. Okay, this was a consolidation, and now the next leg on the down move is starting. So if I put a Fibonacci retracement level, to know the equality level of the previous decline, so it would come to somewhere around 93 levels. Okay, so that is where I think in the medium term, a dollar index is headed. And if the dollar index is going to head lower towards 93, So that will actually be very positive for gold, silver, emerging markets, and equity as a whole, because that would mean that there is a risk on trade that is happening right now. Okay. And when we look at the gold chart, so you can see that the 40-week average over years was respected. Gold form a doji sort of pattern or at the 40-week average. Okay. It nearly completed its pullback cycle, and now it is on the verge of turning bullish. So once we get this bullish crossover, that's where you would expect the next leg of up move in the gold to unfold. And in the broader scheme of things, the wave count is basically 1, 2, 1 and 2. Okay, so over here 3 will start, then 4 will come, then again 3, 4 and 5. So in that sense, there is a long way to go. And just to put things into perspective, how the long term chart is placed. Okay, so over here we are seeing a multiple resistance, say somewhere around 2060 to 2070 dollar. And I think once that is taken out on the upside, there can be a huge rally in gold. So this can be one interesting chart. And also one needs to understand that whoever who follow technicals, this is a big cup and handle pattern that is developing. Okay, so over here as well, the breakout point is say somewhere around 2130. Okay, so breaking past 2070 will be the initial signs of resistance. And if 2130 is taken out on the upside, that would actually indicate a cup and handle breakout. Okay, and that would imply that there can be a big uptrend that can happen in gold. Now similar is silver. If you see the chart of silver, after 2020, there has been a rise till $30. After that, it has been in corrective mode. So over here as well, the broader count is 1, 2, 1, 2. And again, 3 will unfold. Then there will be 4, 3, 4, 5. So that way there is a long, room on the upside that is left in silver. And I think the decisive point will be a break above the high of 26.12. Once that happens, a higher top, higher bottom structure will be in place, and also multiple resistance which are there. Okay, around this 26,000 mark. I mean, around this $26 mark. That will be taken out, and that will also be positive for silver. And also, if you look at the weekly RMI, it is almost on the verge of turning bullish. So that is another confirmation. So, a bullish crossover in RMI, which is a proprietary indicator, then a close about 26.15, all this will indicate that the bull market in silver is now about to start. And the other thing is that the dollar index is also confirming by breaking below its significant support level of 100.70. Now coming to the Indian indices, Indian indices have already, they are on tear. Okay, because we have seen a medium term breakout around this 19,040 mark, and since then the Nifty index has been inching higher. Okay, so broadly, in plain technicals, there was a consolidation for 1.5 years, and now that consolidation seems to be breaking on the upside, and this is actually very positive for the Nifty index. And you can see similar patterns in the mid cap index as well as in the small cap index. So in the small cap index, this is not visible, especially for the Nifty small cap. But when we look at the BSE small cap index, so over there as well, we will see a similar pattern wherein there was a big consolidation, and then there was a multi-month breakout. And all these indices are heading higher. And especially now, I just want to take a moment to discuss for where we are headed in the Nifty index. So over here, let me. So see over here, you can see that this channel is broken. Now, actually, the next channel on the upside. Sorry, I have a lot of markings over here right now. I'll try to remove it. So yeah, when we look at the channel, so now the next level on the upside, especially from the near term perspective, is somewhere around the 20,000 mark. Okay, and that can also act as a psychological resistance level as well, because we are reaching that milestone. But broadly, if we look at the wave count, this entire move was wave one. Okay, which means that if wave three has to unfold, wave three should ideally be equal to wave one. And if we do that, then that level comes to somewhere around 20,800 levels. Okay, so that is where I think in the medium term we are headed. But in the short term, basically from a week's perspective, this is one level that we need to watch out very carefully as to how Nifty behaves over here. Because again, these are all dynamic level. Okay, so each passing day the values will change. So in that sense, the upside level can also inch higher. But in the near term, 19,950 to 20,000 is the level to watch out for. And if you see any of the index, okay, they have been rising higher, after taking support at the, key daily averages. So you can see over here, wait, I'll hide the drawings. So you can see over here, the index has been taking support. In fact, it has not even touched the 20-day average yet, and it is trending higher. So that speaks how strong the trend is. If you see, IT is now joining the party. So over here as well, it is around the resistance levels. But once that is broken, then it will be looked as a big base formation and a breakout from the base. So that again will be positive for the IT index. And the broader point what I'm trying to make is that if you pick and choose any of the index, okay, they are trending higher and they are taking support at the 20-day average and they are trending higher. Okay, so broadly, as long as the 20-day average doesn't break in all of this trending indices, I think there can be minor degree correction or consolidation from time to time that we'll see. But once the 20-day average is held, and it takes support after testing the 20-day average, most likely it is going to continue its higher top, higher bottom structure, and it is likely to inch higher. Okay, so broadly, we are in a bull market which is now a lot more broad based. Okay, so there will be sector rotation from time to time, but broadly we are headed higher. And the best way would actually be to trail the reversal level with the 20-day average and hold on to the trend until it gives us the signal that it is reversing, or it is probably ending.
Got it. Correct. So far, so good again. We're not seeing a lot of negativity come in to actually butcher the indices right now. And things seem to be cooling off and settling down, which is a good news. So yes, anyway, just a cider note for people who are watching, we won't be doing this show for the next 2 to 3 weeks. But if you want daily market updates, I will link down below our insider club. So you can view the Weekend with Indiacharts and also see Rohit sir give his perspective of how the market is being placed. So yes, thank you so much, Jeff, for this session.
Thank you.